Trading looks simple from the outside. Charts moving up and down, numbers flashing on a screen, money appearing with one click. But if you've been in the game long enough, you know the truth. Trading is not simple. It's a battle, not against the market, but against yourself. And in this battle, one word decides everything: consistency. Today, we're going to uncover why traders struggle so much with consistency, and more importantly, how to finally fix it. If you've ever felt like you do well for a while, then sabotage yourself, if you've ever made money one week only to lose it all the next, if you've ever wondered why you can't just follow your own rules, this is for you. Most traders think their problem is strategy. They believe that if they just find the perfect indicator, the perfect entry, the perfect system, then everything will click. But ask yourself this: how many times have you already switched strategies? How many times have you learned a new method, tested it, and then abandoned it after a losing streak? Here's the uncomfortable truth. Lack of consistency kills more traders than lack of knowledge. Because you can have the best system in the world, but if you don't execute it the same way every time, your results will never stabilize. One day you're disciplined, the next day you're emotional. One day you risk 1%, the next day you risk 5. One day you let profits run, the next day you cut them instantly. The result? Chaos. Random actions create random outcomes. And random outcomes create the illusion that trading doesn't work. So why is consistency so hard? The answer lies in psychology. First, emotions. Fear, greed, FOMO. These emotions hijack your brain in seconds. You can have a written plan, but the moment price moves, your brain screams, "Close now before it disappears," or "Hold longer, squeeze more." You know the rules, but your emotions rewrite them in real time. Second, impatience. Traders hate waiting. The market might only give one good setup a day, maybe even one good setup a week. But impatience pushes you to force trades, to create opportunities that aren't really there. Third, instant gratification. Humans are wired to seek quick rewards. We want the dopamine rush of being right, of making money now. But consistency requires delayed gratification. It requires sticking to boring rules, even when nothing exciting happens. That's why trading is so difficult. It's not that the rules are complex. It's that human nature resists following them consistently. So what happens when a trader stays inconsistent? Well, they live in a cycle. A few wins create excitement, then a mistake wipes everything away. The account balance looks like a roller coaster, up, down, never stable. This isn't just about money. It's about confidence. Every broken rule erodes self-belief. You stop trusting yourself. You doubt your system. You doubt your ability. And when you lose trust in yourself, trading becomes torture. You no longer follow your plan because deep down, you don't believe you can. Here's the painful truth. Inconsistency turns trading into gambling, and gamblers never last long. Now the important part. How do you fix it? How do you actually build consistency? Step 1. Simplify your system. Forget chasing 10 indicators. Forget complicated strategies. Choose one setup you understand and focus only on that. Simplicity makes consistency possible. Step 2. Fix your risk. Strong. Pick a percentage of your account you're comfortable losing on each trade. 1%, maybe 2. Then never break it. Consistency begins with risk management. If your losses are controlled, your emotions are controlled. Step 3. Focus on process, not outcome. Don't grade yourself on whether the trade won or lost. Grade yourself on whether you followed your rules. A losing trade that followed the plan is a success. A winning trade that broke the rules is a failure. This is how professionals think. Step 4. Build a routine. Start each day the same way. Review charts, mark levels, set alerts, wait for setups. End each day the same way. Log every trade in a journal. Track what you did right and wrong. Over time, the journal exposes patterns, and patterns expose weaknesses. Step 5. Accept losses. Consistency is not about never losing. It's about losing the right way. If you can take a loss without breaking your plan, you've already won. Because the market will always have losing trades. What matters is whether you can stay consistent through them. So here's the final mindset shift. Most traders chase profits, but professional traders chase consistency. Why? Because profits are the byproduct of consistency. You don't control the outcome of one trade, but you do control the process. You control whether you follow your rules. And over time, following the rules creates stable results. That's how compounding works. Small, consistent actions, repeated day after day, create massive outcomes. If you want to fix your trading, stop asking, "How much can I make today?" Start asking, "Did I trade consistently today?" Remember this: consistency is not just a trading edge. Consistency is the edge.